That is nice. Okay. Good morning, everybody. Good morning to you. Can you hear me now? Is there sound? Okay. Bum, bum, bum. All right. We're good to go. I knew USD card would do this. I knew it's gonna do this. Knew it was gonna do that. All right. Hello, everybody. Good. I'm gonna be having a section with my mentees in a few minutes, so I'm streaming live to the group. Just in case you're watching, I'm trying to get trade set up for it, and in 2 minutes, I'm gonna go into analyzing the market, talking about trades that I'm looking at using a simple strategy that I believe anyone can learn. It's simple to learn it. So for those of you watching us on Facebook, comment, make a comment in the session. Let's see. I want to I want to be sure that you can hear me, you can see me on Facebook. And those of you watching YouTube, also comment the comment section. Use that so we'll be able to tell if you can hear me or see me, and let's get going. All right, so the next thing is to actually take I'm gonna invite those in the Telegram forum to join us quickly. While we take this trade this morning, I'm thinking it's gonna be a beautiful opportunity to cash this trade this morning. It's about to happen. is about to happen. It's about to play out. So I'm waiting for this. Waiting for this. All right, let's go. Let's go. All right, let's go. We can see prices pushing up already for those of you watching now. So we're gonna wait for a beautiful break out of this place.
Sir, good morning, sir.
Good morning. You're welcome.
Thank you, sir.
Yep. Let's.
Please, I'm going to receive my assignment by close of the day.
You what?
My assignment.
Yeah, you
I'm going
submitted
to
it.
post it by the close of the day, sir.
You've done it, yeah?
Yes, sir.
Where is it?
I'm having issue with my distance, so I'm going to send it by close of the day, sir.
Okay. Uh, so waiting for anyway, let's wait for the rest of the guys to come in quickly. Wait for the rest, everyone else to come in. You can share the link for those of you watching on YouTube. Share the link. Share the link. We're about to get do with this. Okay, we see a rejection there. That's a warm up. Price is warming up to just testing those liquidity, taking out liquidity gradually. If it rejects from there and we find out price close bearish, we'll sell it and sell it and take TP here before it goes up. So I'm anticipating it might reject, come down before it rally up again. It wants to take out this liquidity low before it goes up. So whichever way it wants to go, we're ready to look at it. Just give me a sec. Let me quickly do this. Listen, those of you watching, and hit the like button. Hit the like button. Hit the like button. Hit the like button. I have a few of you watching on Facebook. Watching on Facebook, hit the like button. So share the video. That's what you need to do. Help us to share the video, please. Because because I'm going to be explaining. Ooh, look at that rejection there. That's the point. That is the point. Rejected all the way. But we have to wait for the candle to close. Wait for the candle to close. See that play around. So, yes, good morning, guys. You're welcome. Where is Mr. Steven? He's not here yet. Wait for that, for him to come to.
Morning, sir. I'm here. I'm here already. Good morning, sir.
Yeah, good morning. Okay, yeah, Mr. Sampson's there as well. All right, yeah, let's. Your name is not Profit. What's your real name? You say Profit. You think by giving yourself Profit as a name, that's how money comes.
I don't mind you. Oh, God.
I'm surprised. You sounded everywhere Profit. It's not. That's not how money comes, though.
I thought it was.
No, not easy now.
I don't mind you.
Oh, God, Profit. That's not how it comes, though. I work, put in the work, money comes. All right. So, what am I looking at to trade with this pair right now? Very simple thing. Let me help those. There are those in the. For those of you in my Telegram group, share the link. If you're watching and you are in my Telegram group, can you kindly share the link there? Let's get those guys in. Let me see if I can quickly do that too. I just want to help a few people today. I sent some trades into that place, and I believe it's going to give them some opportunities to trade too. Okay, here we go. I said done. Okay. Simple things that I'm looking to do on this stuff. Let me see. I'm looking at these two trades. Oh, this one is already executed. Okay. Oh dear. That's the thing about this. You can't follow through on many trades. This one is already on. This trade is already on. I was just looking at it a while ago. I was waiting for this candle to close. That was the entry, and we were targeting the previous day high, and our stop loss is there. So you can still enter if you want to take this one. It's a beautiful trade. That's 1 to 2.7. So you have 26 pips stop loss. This is GDP AUD, 26 pips stop loss. So calculate it using baby pips. Use baby pips to calculate your, or use any of the loss size calculator that you have that you know. And then ensure you put in the right balance of your account, put in the percentage you want to risk, 1% or 2, whatever, and then put the stop loss 26 that you saw there and choose the pair. You choose the pair, which is GDP. Is it GDP card? AUD. GDP AUD, GDP AUD, GDP AUD. That's one. So you select it, put the price. The price is at 1.9. 5358. Okay, and then you put in the stop loss. So we're having stop loss at 26.5. So we calculate stop loss 26.5. That's it. And then you put the rest of there, whatever you have. Let's say you have $1,000 account or 10,000. You can reach 1%, and that's all you need to do. That's it. You hit calculate, it will give you the loss size. So you're using this loss size to target that. So if price goes against you, you lost $100. That is fine. If it goes in your favor, we'll gain $270 in that trade. So we have, obviously it's going to affect it because of GU. You can see GU's also rejecting there. That's the reason for that. If GU goes up, then that definitely go up. But at the moment, we're having this consolidation. That particular pair, GDP AUD, already move ahead a little bit. So that's what we're looking at. It moved ahead a little bit. So we wait for price to break out of this consolidation zone, because between here and here is a very short trade. I would not like to take it personally, because even though if the candle close so big, if the candle closure is so big and it engulf this one, if this closure, I want to show you, if this candle closes and engulf this one, if it engulf this one, it's going to go down more to take out liquidity. So we will wait. Let it take our liquidity, because this place is too small for us to catch any trade. It's like scalping. We don't want to do that. So we'll wait for that liquidity to be taken. Once the liquidity is grabbed, it might even extend a little lower. If we break this one and this one, then we should be looking for a pullback to sell more. That means the buy is invalid. We will not be looking to buy. But if it breaks without rejecting, let's say it breaks out of this zone, let's say price break out of the zone and then reject and pull back in and close above these two lines, that means close here or here above bullish, and then continue, that is a buy. That means we'll buy it all the way, because they are going to come here, take out this liquidity area here, because they've already taken out the liquidity at the low and then the previous day liquidity taken. So they will rally up. They'll rally up to fill up these imbalances that we have, this imbalance section that we have. So our exit is in this equilibrium. That's what we're trying to get out if price intend to go. Although the overall bias is bearish, I told you on my weekly analysis that we are selling GU all the way. GU is going to be a sell all the way. But sometimes you have to do some counter movement, because that's the daily perspective. That's the 4-hour perspective. It's trending down. But sometimes the markets will want to take liquidity before continuing to the downside, so we can trade with the big guys to take the liquidity. So I'm expecting them to do that. That was what I was expecting them to do around here, by breaking above. After breaking, taking out liquidity, come back and retest and reject and continue. Then we'll get out on that place, and then we'll look for opportunity to sell at that level with price action, and then we can target this low or target this low or target this low, depending on price. But the problem now is, let me show you. The problem now is, if you go to the daily, time frame, this is what we have. We have this massive drop that happened yesterday. I just caught about a few pips on this drop. I wish I knew it was going to drop this much. I would have left my trade on a trailing stop. But nevertheless, it was still a profitable trade for me. It was a profitable trade. But here is a massive drop. So I'm expecting them to take out this low. So that's why if we get out of this area, we're targeting this liquidity low, this area here. We're targeting this low for TP and another low, possibly, if the market keep dropping. Those are the two areas of profit target. Remember, we anticipate that price will get to 1.26 psychological level before we'll be able to find any major retracement to the upside. So we've been talking about this for the couple of weeks. All right, we've been talking about this when price was struggling around this area. we were talking about it. Okay, that was October. We're discussing this area that price was going to sell more. If it can break this low, which it did, and we know it was going to continue downside. As you can see, price has done that over the months. So if you watch my previous weekly analysis that I've done on GU, you will always see that the consistency has been there and price has actually gone in that area. So what we're trying to do now is to continue to sell. There's a momentum, but we need to wait for something. We need to wait for price to take out the liquidity here first, or price will rally up and tap into the 50% of this engulfing this move that it did. Tap into that area and then drop. Either 38% or 50%, whichever one wants to do, but we're targeting that 50% region. So we're not targeting the previous day high at all, because the previous day high is way above. It's way they need to use price, market manipulation, huge amount of money to push it up again to engulf it before they can do that. So that is not a target. This is our target, this middle ground. Alternatively, if price will not go up and it wants to continue selling, then we'll target this low. That's what we're doing. So that's what I wanted to show you. And if you go to the 4-hour time frame, you can see the range at which you're dealing with. This is the range at which you're dealing. So all we're expecting price break out of that range and we sell to the downside. And we can still sell in between or buy in between, depending on price action. So we already see that price here is telling us that price could go up on the 4-hour. So we can see the price action, which is telling us that price could go up. There's a potential that price could go up. All right, another bullish candle rally up like this, like a W pattern or something, and then before coming back down to take out this liquidity that it will create. So we are anticipating that hopefully that be it. But at the moment, you can see the multiple rejection to the downside. The first candle here, you see this hammer candle here that printed. So this one already tells us that the market may rally up. We have this, but these two candles, this one is responding to it already. So we can see that they are rejecting it anyway. So there's a rejection here going on, which is not bad. It's something you want to see, but it's not a factor because the momentum entirely is bearish. We can see that so clearly. We are bearish, but we are anticipating a pullback. So it is that pullback we try to buy on the 15 minutes time frame. You get it? If he give us that opportunity, so we try to buy it. That's the reason we're trying to buy that, trade it. Outside that, I don't think there's something more, anything more we need to do concerning that. So yeah, that's what we're waiting for. So now you can see this region is what I call the pre-market high and low. So it's a very simple trading system, but it takes time to master because of price action. It's all about price action and key levels. That's all. There's no indicator here. It's about price action and key levels. So I'm waiting for price to give me a sign. Somebody says there is no sound. I think, okay, you can hear me now. Great. So we're looking at that opportunity to, this is all consolidation. Remember, it happened like this yesterday, so don't be trapped. Don't be deceived. Look at that. It happened like this yesterday. There was a lot of multiple consolidation. If I was to skip this area before New York section, you see this was what we were seeing yesterday. So we are still in London section. This is a key zone. It's not up to 10 o'clock. We're still in London section. We can see that yesterday we have so much consolidation going on. Price pushing up and down, no direction. But we were able to break out of it and then it dropped. So when New York section, immediately New York section opened, we noticed price started indicating a directional bias. By breaking out of that low, by breaking this low, immediately that low was broken, what happened? Price plummeted. It just dropped. It just dropped crazily. So if you didn't find an entry here, if you missed an entry here, there's no way you would have gotten an entry on the pullback. You didn't answer my question about buying in selling markets. What question is that? Let me hear. Why buy in a selling market? I just told you it's counter trade. And I said it's a retracement. You're buying retracement because otherwise you should not trade. You don't have to buy it. You don't have to buy in a sell market. It's not like is a debate. It's not a debate. What I'm trying to tell you is I'm looking at that position as a possible trade. I'm not saying that our trade is a buy. I'm saying it's a possible trade. Okay, so if we get that, that means the retracement will happen. That's what we're talking about. I'm looking at a retracement that may happen before a continuation to the downside. That's the reason for it. Okay, so we're looking at this. You see this consolidation going on. So the possibility of price continuing to the downside is obvious. The possibility of price retracing to take out liquidity at this top is obvious. So we can see everywhere that there is room for price to take out liquidity to the upside. We see the liquidity built up over the Asia session, and we also see liquidity to the bottom. So we have liquidity at both ends. Money is gathered. These guys have spent some time to gather the money all the way at the top and at the bottom. Okay, we have that. So in that place, we have consolidation in between. But these are liquidity pools. Okay, so we're looking at price taking either of them. But what we want to do is to trade in the direction that they are taking the liquidity. You want to go in that direction. That's what matters. And now, mostly, if the price comes down to take out this low first, then they will go up to take out this one. So that's when you buy. You get it? But if they go up first to take out this one, you could literally buy. But the question is, when are they going to exit? Where are they going to return? So when are they going to retrace and start selling? Possibly at the middle of this impulsive move or the middle of the yesterday drop. You see, if you have to look at yesterday trade from the start to the finish, it was a massive candle, which I just showed you. So there's possibility that price will tap into the 50% of that and then began to plummet and drop massively to gradually take out the liquidity at this low. So if it fails, based on my experience, you will find that price will sometimes fail to take out the liquidity of the previous day and then bounce off to take out this liquidity, because that could be it, and then reject to come down to take out the liquidity and close bearish for the day. So it happens. So when that happens, you just have to know, well, okay, this is it. And you don't need to buy. Like I said, you can wait for price to come up here and sell. That's one way of looking at it. Another way that they may go about it is that they will actually take our liquidity up here and then drop to take out this low and then continue lower. They can do that as well. But we are not sure. So the possibility of this trade is probable. So we're looking at the probabilities of them. And looking at price action, we could expect price to push higher and break that high and take out liquidity. I'm expecting that will happen today. You will see it happen. So then push up, take out the liquidity. But if we have a retracement before the liquidity is grabbed, then we'll take it. We'll buy. What I mean by that is this push up that is happening right now. Let's assume the candle close above this green line that I call pre-market high. The price close above that green line, bullish like this. The next candle coming into it is a buy. I'm going to enter the trade because they are going to target this liquidity. if they don't push all the way up with one candle. Let's say this candle close above this line and then stop bullish. Let me show you what I mean. It's just price action. Let's say this candle print now close bullish like this, okay, with a wick like this and close bullish. Right, let me make it bullish so you can see it close bullish like this. The next candle that will retest this line is my entry. Otherwise, I will enter on that current one. I will enter on that current candle because the difference between it retracing here, coming back here is just minimal. I can see the bullish momentum. So all I need to do on price action is to long at that price right there. And I'll put my stop loss a little bit lower on the candle that pushed above that place. And I will target 1 to 2. Price action 1 to 2. Risk to reward. That's it. It may not get to the place I want them to, but that would be my target 1 to 2. So I know they are going to take out this liquidity. So that's the alternative. It's a quick catch. Get out. So that's what I'm looking at. Is alternative. So if they push higher and then reject at this equilibrium, I'm expecting them to drop. Give me price action, bearish, whatever. Then I'll look for an entry to sell. I know that they are going to drop all the way down and then eventually take out the liquidity to the lower side and close bearish for the day, because the previous day candle could be bearish. Because the previous day candle is bearish, they want to close on that. You see, look at that. Did you see anticipation? We have how many minutes left? 3 minutes left on the candle. Look at that. Look at anticipation. Look at what I anticipated. Can you see what's going on? Can you see that? And if you check that GA, okay, it went down a little bit. Now it's coming back up. The GA is coming back up. But I don't really want to trade that pair because GA has done some terrible stuff. I don't understand. So you see this. You see what it's doing? You see that? Now, if this candle close in 2 minutes around that level that I measured, that is an entry. This bullish candle right now is telling you that there's volume in the market. The buyers are pushing price. They want to create a retracement. It doesn't mean that the trend is bullish. It just means that the retailers in a short term, they want to buy the market. And the big guys will let that happen anyway. But it's a liquidity grab that I know they're going for. So all of this liquidity had to be taken. And it's easier for them to do that because the overall trend, my start, that means the downtrend might start in London and New York section. So when that start, like it did yesterday, it would just start dropping without hesitation. So first of all, they will push up for that before they do it. So let's see how this candle close in the next 1 minute, 30 seconds. And then we'll know the direction we're going. I think gold has just activated the trade to the buy. Liquidity is going to be taken. Gold is a buy. For those of you, obviously, I always tell people to buy gold. Look for opportunity to buy gold. Don't sell anything. At the moment, if gold is dropping, selling like this one, you see, this was a day before, massive. Look at that trade analysis that played out. 1 to 2, 1 to 3 risk to reward. Played. Nice trade. Beautiful analysis. It worked out beautifully well. And that was I didn't even exactly what happened to GU yesterday. I didn't even know it was going to drop massively like that, but it dropped crazy. But again, that's what it is. That's what it is. So we're looking at all of this system because you guys in my mentorship, you already know. I've thought about it. I'm just giving you trade opportunity that we're using the system for, and then we'll go over a few things after the live stream. Now let's Let's see this. Let's go back to our pair. Let's stay focused on GU. Wow. Anticipation. Can you see anticipation? Can you see that? As though I was talking to the market to just, okay, that's it, guys. That candle is an entry. I'm entering GU now on my mentor trader on the left. I just bought GU. My stop loss is at this low. My stop loss is 15 pips. Make it 15 pips. So you know what to do with 15 pips. You know what to do. Put your 15 pips there. Put your accounts there, whatever you're trading. Put the GU pair right there on baby pips. And you do your calculation. Now, you may want to retest a little bit. That's fine. But ensure your stop loss is fixed. So don't move it. Leave your stop loss at where it should be, which is that previous candle, the candle that just pushed up. All right, that candle that just pushed up, put it at the low, at the bottom of it. Okay, because it's a sell, the momentum is going down, so we don't want to, the momentum overall is a downtrend, so but we don't want to we don't want to assume that price will just go up. So we are protecting our interest, our capital. So just in case it's coming down, we know that, okay, we'll take that trade. Then if it comes down and hits us out, we will wait for New York section for us to sell the market completely. Okay, that's what you want to do. So that's how you look at it. So now we are in a trade of this. I just enter one position on that candle when it closed. So I'm anticipating, because with this bullish candle, you can tell the buyers are in the market. Okay, that's the momentum. The buyers are, you see the way it's pumping because they're targeting this liquidity area. So the only thing we want them to do is to stay up, to continue up. And when they continue up after taking out the liquidity to fill up this imbalance, I'm expecting them to react here anyway. I'm expecting them to react at this level, this price action here. I'm expecting them to react there. But whichever one they do, it's okay.
Sir, I have a question.
Yeah.
Sir, I thought after this bullish candle break the previous pre-market high, that is going to retest before we can be able to buy.
Yeah, because you see, the break was very close and you see where the candle is. That's why I have to explain it. Not all the time the candle will come back. It may still retest, but sometimes it doesn't. Like yesterday, you see what it did. This was the pre-market low around here. Where is it? 777. Yeah, this was the pre-market low around here. Okay, so the candle broke. No, the pre-market low was somewhere close there. Okay, and the previous daily low was there somewhere here. Let me show you. Yesterday trade. We have the previous daily. This was yesterday, so the previous daily high was here. Yeah, price already broke the previous daily low way back, so it did not retest. So we're using the pre-market low and high. So the pre-market low and high there, price broke it. All right, somewhere there. Let me see. Somewhere here. Right. Just a minute. Yesterday. Somewhere here. Good. Look at it here. This was the candle. So if you check that, let me just put that line there. This one here. Okay. That's a pre-market low right there. Okay. Let's see what happened on the 15 minutes. Look at it. It broke it. This is the candle that broke it. Did you notice it did not retest? But it broke it and it was so close. So it didn't just drop massively, but it was close to the line. This is price action. Let me show you. Understand price action. Where's my... Hold on, let me show you. Remember price action. Very important. At the key levels. Once you get the price action at the key levels, very important to follow suit. Where is it? Screenshots. Okay. Remember this. Okay. This price action. For those of you, you won't be, for those of you on YouTube, you won't be able to see what I'm showing them now. But you remember this candle, right? This candle, this candle, this candle, this candle, this first three. Very important. So look at it there. It played out. This is one of them. You see? And that's when it broke that line. But it did not retest. It just pulled back a little and then dropped, kept dropping. It did not retest all the way until, so you would have missed all this, all this drop is happening. So sometimes they do that, but you want to wait. That's why you have to practice. It's not something you just smash like this and say, I got it now. It didn't even take me 2 days, 3 days. I just understand the system. It doesn't work like that. Okay? Price action, it takes time to master. Price action takes time to master. So you have to understand it. You see how I analyzed the market before it began, before it happened this way. I predicted that it would do this. And I was interpreting it, and it worked in according to the plan that I just thought it's going to do, as though the market was listening to me to obey me. But that's how you want to get your analysis to the point that you understand price action. You understand what it's doing. You get it? That's the point. So this candle very close here at the liquidity. If you check one of my students, let me show you on the Telegram, you guys who are there. Mr. Steve sent me something yesterday. Let me show you what he did. Let me show you where he got in. This was his daily. I told you some of you to send your assignment. Only 2 of you did. Profit and Mr. Steve. And the other one, somebody told me now you're going to send it later. So this is the previous daily high and low. I think this is a Japanese yen pair or something. And look at the pre-market high and low. Look at what it did. Look at the entry. Did you see the entry? The entry was this one 15 minutes? I'm not sure what time frame is this. Please, whenever you are sent.
15.
Okay, good.
15 minutes.
So you notice, let me go back. You notice that he predicted the movement. So with that prediction, you can tell, obviously, I think he saw this this price giving that pre-market high and low. All right. So he predicted the move. But I feel that is even too aggressive, because it would have been on the next after that candle closed at the bottom here. Okay. But that was aggressive entry. But look at this. You see this kind of candle. Okay. Look at when he entered. He entered when this candle pulled back into this place. He didn't have to wait for it to come here. He entered, and his stop loss was just a little bit above the pre-market high. Because this Japanese yen pair, they have a way of getting they are very volatile. All right. So sometimes you have that as a challenge. But that's the way you read price action. Once you see, look at the first one. Look at the first one. That's hammer. He already knew that this one, with this hammer, this inverse hammer that just printed, or doji, is going to get in with that massive weak rejection and a closed bearish. That's the sign. That's already telling you that we're going down. So like what I did yesterday, I traded when price closed bearish below the pre-market high, not even the pre-market low. I knew that they were going to go down. I was just waiting for it to close with price action at the pre-market low, and it happens. So what am I saying? if you check prices, sometimes you will not be able to get exactly what you want, what you anticipate. So you have to be ready. You have to be like this. Let's assume this was the candle. This would have been a candle to enter. Did you notice when they came back? They went all the way up, came back, and then go up again. But of course, it wasn't a buy market. That was Asia session. I mean, London session before it eventually dropped. But look at the candle that got me into the trade. Okay, this was a pre-market low. This was a pre-market high. Where is it? 76615. Okay, yeah. This was a pre-market high. This one here. This level here was a pre-market high. Guess the candle that I entered the trade with. This one. This one. First of all, I saw this. I knew that it was ready. But when I waited a bit, when I saw this one, I knew it was in. I just got in and price just started dropping. Of course, there was a retest. You see the retest back on it. It came back and retest, rejected with that candle behavior. It rejected. That's fine. But you just have to wait for that to happen. That's why I think that even this buy may not go all the way up. Okay. But because the candle of yesterday is massive, I'm expecting them to retrace a little bit. Okay. I'm expecting them to retrace a little bit. It hasn't taken liquidity yet. This liquidity must be taken. They will have to take this one. If they don't take it, then they would have induced us to buy, to get into the trade by creating bearish. If this candle close like a hammer and bearish and below the pre-market high, then I'll be expecting them to take out our stop loss. So for that reason, based on price action, I will get out the trade quickly. I don't mind losing small commission because you understand price action. If you don't understand price action, that's when you start leaving trade and it's going against you. For instance, you see this rejection now that is happening. It did all of that yesterday as well. There were so many times it was doing all of this stuff. So that's understandable. But don't just run away because you still have about 2 minutes 2 minutes left on this candle. So we want to see how it closes. If it closed bearish below this line, this green line, all right? If it closed bearish below the green line, then I should be thinking that they are coming down here. But if it fails to do that, this is just a threat. This drop is just a threat. They will come up and then with another candle. And then until they take out this liquidity. That's it. So that's the way you want to see it. It's just basically price action thinking. All right. I hope that's clear now. And if you put the, let me see. Let me delete that. If you put a moving average there, for instance, let me see if I can put my stuff there. Where's my moving average? This a bit. Okay. If you put the moving average there, this is not the one I'm looking for anyway. This is the second one. You see that on the moving average, price just crossed. We see the blue crossed above the red with this bullish momentum. Okay. And we can see that this is price now trading above this. So let me get the other one. Not this one I wanted to show you. That's the one. Okay, not this one. Sorry, I've done some indicators. Where's the? It's been a while I've used it. I'm not looking for it. Where are you? Where are you? Is it this one now? Not this one still. Okay. Not that one. So what I'm trying to say is price is still trading above a moving average. So you see now the candle closed bullish. Did you notice? So that's why you have to wait for candle closure. Don't just jump off and say, "Ooh, it's going to go against me. Let me just close." No, you have to understand, read the candles. Like I said, they will want to take out this liquidity first before anything. I'm expecting them to be reacting at this level. That's what I expect them to do before anything else. But let's see how it goes. Okay. I'm trying to get that indicator on it. So if you have questions, please ask on the comment section. Anyone, those of you there, please, what pair? We're looking at GDP USD. GDP USD, GDP USD, GDP USD, GDP USD. Where's that indicator? What has happened to you? It's not void, it's not there. It's... Okay. How come? Oh, there's a difference there. Okay, I should delete this one then. Yeah, I saw it now. That was a confusion. So you see, this is this one here. So already in a short, just for a short move, a short term, we are bullish. So we have these indicator telling us that, of course, there's a lot of consolidation. That's why you see this repeated price action here. But you can see the last two signal that presented themselves. Price is trading above this moving average, which is 34 exponential. That's the default. So you see price above it. So we can tell we have a buy telling us price will go up a little. Now, it may be lying. It's something else may happen. But I want you to notice before this move happened, price was trading below the moving average. Up to the time I said, I'm waiting for this candle to close above. So this candle eventually closed above. If I remove the color coding, the bar color, you see it. You see the previous candle? This candle closed bearish. So this one was just the first one that closed above it, and it gave us like price was going up. But we have a drop, a rejection. So, and I told you that if the candle engulfed this one, it's going to go down a little bit more. But it failed. But it engulfed it. We can see that was an engulfing candle. But the buyers refused to give in to the sellers. So they rise up and close above. So now price is above this level. And we already find our entry. We stay there. And we have our stop loss below the moving average. So we stay there until price give otherwise. As long as price is going up, you just have to be patient and let it do what it got to do. That's the way you see it. Look at that sale that happened yesterday. Exactly the candle I was expecting to get in. You see that? It prompted a drop. The candle was already bearish. Price is already trading below the moving average. But I was just waiting for another confirmation. And guess what? It traded with the strategy I just explained using the pre-market high and low. It give me that entrance. You can see, even using my indicator of the moving average, you can see that it played out beautifully. So if I was to, I didn't even use this indicator I've not used it for a long time. If I was to stay with the indicator, I would have leave the trade until I find a buy signal somewhere. So while this drop was happening, I would just leave the trade until I have seen a sign that price is going to go up, which is here. So this is when I would have closed my trade here. So I would have leave all this trade to happen till price got to this place. So this is the place I would have taken profit. So all this drop that happened would have been beautiful. But I closed out around here yesterday. I entered around here, 1 to 2. I was out around this place. So all this drop that happened, I missed them. I didn't even take them in. Why? Price action. So that's the reason for that. So let me take that thing off, because every time I use indicator, it appears to be trading like an amateur. So let's just leave that out. Okay, any question on that? Anyone have a question? For those of you watching as well, ask a question. And I'm in the trade. I'm still gonna be on it until otherwise. This live trade section, you don't need me to be telling you enter like this, enter, buy, go. No. You are responsible for your risk management. You're responsible for your emotion. You're responsible for your price action. So my own is just to teach you what I'm doing and show you what I'm doing and how I'm looking at trading, taking trades daily. It's just that I can't be doing live stream all the time. So that's the disadvantage. But I'll try. I'll see what I can do. But so this is a beautiful entry trade. You saw how we got in, how we analyzed the trade before it got in. Now they are targeting the liquidity at that push up. We have about 8 minutes on that candle. We expect them to take out the liquidity. And yeah, we expect them to do it. So we're targeting 1 to 2 on this trade. No gimmick. Just 1 to 2. Don't be greedy. So we're looking at price getting out there. So this is where we're thinking of getting out, around this level. If they get there, we're not sure yet, but if they get there, we will take our profit there. But I'm expecting them to get to this equilibrium level. Any question? For those of you in the session, training session, any question? This is just demonstration of what I taught you. So I just wanted to demonstrate with live section. So that's what we're doing. There's no guarantee that this trade is going to go in our favor. I'm not saying it's going to go in our favor. Remember, the downtrend prevail. Downtrend is a downtrend. The market is selling, is a sell market. What we're trying to do is just to quickly get a buy based on the retracement. And that's another way of trading. Like if you master this section of trading both sides of the market, understanding price action, understanding momentum, understanding retracement structures, market structures and retracement. Once you understand that, you know exactly how to go both sides. Before you say, I want to trade against the trend, you would have done your analysis properly to know that the market will go in that direction. That's the way you do it. Now you see that they are acting as though they are rejecting there. This behavior that they are acting as though they are rejecting price here, like a support level, resistant levels, like they are acting at this is a resistance. I'm rejecting this price. You may be thinking they're gonna just plummet, but they will have to take out. They are gathering more liquidity, so they will have to take it out. There must be a one candle that smash up and reject mightily. Once that candle, something like that happen, then you know that they are ready to go down. They've taken liquidity. They are no more going up. But again, I would say if price get to 1 to 1 like this, for instance, price get here, that's 1 to 1. Okay, and you notice is acting up, just book your profit and get out, because it's a sell market and there's possibility that it's going to drop because of this candle here, this one, this small order block price, this one here. There's another block here, okay, that I feel that they will react to. That's why I mark that area out. But until price get there, I'm going to hold. So that might not even be a factor for them. Might not be a factor. Let's see this one. This one is just going opposite direction. That's crazy. How come though? That means AUD is bullish right now. Let's see AUD. Yeah, AUD is bullish right now. So it's rising. It's stronger than Canada pairs. It's stronger than USD pairs. So let's see that. Let's find out that. Let's look at AUD. AUD. No, let's look at the sentiment first. Let's look at the sentiment on the from the big guys. Let's see what the big guys are doing. AUD, 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 AUD. Aha. That's why AUD is stronger than, yeah. You see, look at AUD. You see the chart. You see where AUD is. You see where this one is. So what pair was that? GDP AUD. So we're looking at GDP AUD. Why is it going up? So this is GDP. This is AUD. They are equal. So the question is, why is it dropping? So let's see what happened here. What they have done. This is AUD for the week. What they have done, -2, minus 5,000. So overall is bullish. Okay. Where's the GDP USD? GDP. Where's are you? GBP. Okay, two of them are bullish, but we have more price taken out. So we have people's more sell was added to it, and then the more buy was subtracted. So we have buyers. 11,000 order contract was removed, was subtracted from 120,000, but we have 9,000 orders contract was added this week to 75,000. So we can see that overall the market is still strongly bullish. So we have 61% against 38, just like the AUD as well. So if you not choose GBP AUD pair right now, you will see the sentiment will be different. So let's look at the retail sentiment of AUD GDP, because they're almost the same. So we have the AUD, it's not here. So let's say we select minor pairs. It should be here. That's it. Okay, look at that. So this AUD GBP, so we have 49 against 53. So 49 against 53. What does that mean? That's why it's having this challenge here, because they're almost equilibrium. So that's, you see this gray section shows that they are neutral. These are neutral pairs. You see the GDP USD is a bearish market, as you can see. So that's why that buy we're buying is a very short buy. We are conscious of it. That's why it's struggling to go up, because you can see the momentum here. Let me show you by picking a symbol. I just tap GBP USD, for instance, and pick that, only that. So you see, this is why you should I say we're looking for a sell to happen, because 38 against 62, this is the right kind of opportunity you want to look for to set the market. So that push up that we're looking to get is just a short push up. That's why I was explaining. The market overall is bearish. That's clear. But this small buy that we're trying to take is risky, but we're trying to take it because of liquidity that is available at that area. So we want to catch a little bit of money. Otherwise, we'll be looking for sell, a price coming down to break that low and all of that. So in the best interest, this is how I trade. You have to learn the both side of risk, of taking high risk. This is one of the trade that is called high risk. So if I go back to, let me just show you something now. I'll come back to AUD just now. Let me show you GU again. You see, that's why it's struggling at that level to push higher. It's struggling because the market is predominantly bearish. So this retracement is going to be gradually, moving. It goes to gradually act. That's the problem with it. It's going to gradually act. So until we have a change of price action, that means price trading below this green line, then we are not going to get out until that happens. So we already have a stop loss given to us. So we know that, okay, we're just waiting for price to do what it do best. But we know it's predominantly bearish. So you can tell that this is what is happening, predominantly bearish. What's that? We are not buying with the majority. We are selling with the minority, because the minority is the one that wins the vote. So let's go to this one and show you something here. If you select symbol, which is GDP USD, you can see this. The big guys right now, they are predominantly pricing the British pounds, right? But why is it that the market is selling when the 60% or 61% of the COT commitment of traders are buying the market? Why is it so? And few of them are selling it. Why is it so? So that's where you have to find out that what is the weekly changes that is going on. This week they have subtracted, and this week they have added a sell. They subtracted the buy, they added the sell. They did not add the buy, they subtracted the sell. So there's a short predominant drop that is happening of minus 5%. So the market will drop this week for about minus 5%. You see that problem there? So for that reason, don't expect price to just go up because the big guys are buying it. But short-lived, the market is going to drop for about 5%. So if you calculate from this week, starting from yesterday, you will notice the drop that happened. It was massive. So for this week, we're anticipating a range of 5%, minus 5% drop on the market. So that one is shocking, because at the end of the day, you'll be thinking, since the big guys are the one buying the market, we should be looking for a bullish ride. But it's not always like that. That's why you have to pay attention to a lot of analysis. For instance, these are all the information. If I go to the pair himself to look at the summary of the trade, which is, I'll pick the symbol here and type in GDP USD and pick that, you will see that the sell is -2. In other words, this call to sell is -2. So it's a short-term sell. It's not a strong sell yet. So the market is not strongly bearish. It's just briefly acting bearish. Okay? Because if you go to the daily time frame, of this pair, or the weekly, let's say we go to the weekly, you'll notice that this is a retracement. You see where price is at? The weekly low. So there's price action here. So it's struggling to go lower, which if we break this low, then we become bearish on the weekly. Not the structure. This is not the original structure. This is the real structure. Let me explain that to you. We see that we have first break of this low, right? But we have this impulsive move. So if I was to do this, we have this drop here. Okay, this was a massive drop that happened on a sell order flow. This was a sell drop. Okay, now if I stretch it out, when did the market break the structure? There. So all of this movement was a retracement of this massive drop until price broke. So here now is where you start finding the restructure. So now this is the first move to the upside. Price break that high with this push up. So that high was broken. You see this low here. Mark that low. That high was broken by this push up that happened here. So we have this area where price reacted multiple times. So we could consider that this is the first lower low that the market created. That's why it had the momentum to drop lower. But until this one is really broken, this is the real structure. Until this one is broken, we are not bearish yet. So that's why you see that the interpretation is still that way. You see this. You see that trend line. So alternatively, it's still acting as though, really, it's still acting as though it's bullish. Let me just turn on this so you see. So this is you see that drop now is not confirming overall that price is beginning to act bearish. That's still the candle. So this candle need to confirm himself. This weak candle is not closed yet. So it's just highlighting. Today's Wednesday. So it's just highlighting that, possibly this week is going to be bearish. Then when that happens, it could break this low and then will become bearish. Will remain bearish based on the overall structure. So if I was to alter this moving average and turn it to, let's say we make it 200 moving average, for instance, as looking at the long trend, you will see what has happened overall. Price had been strongly bearish. So this small push up was what led to the break of the structure that makes it a buy market for a short time. And now it's like it wants to continue the bearish momentum. So overall, if we were to shrink out, I'm talking about higher time frame analysis. If you were to shrink the trade out, you will observe that this drop here to this level is still at price reacted at a particular fib 71% level. So there's a potential that the weekly time frame, if you look at it overall, we are bearish. So that means is enough. The buyers are saying we are back to get in. So there's a lot of trade, a lot of order being put into the buy, but the sellers are still struggling to give up to the buyers. So that's where you find this whole thing happening. So you have to understand the movement. Why is market doing what it's doing? And most of the time you put your cap off, you wear your cap of fundamental analysis, technical analysis, and sentimental analysis. You will not make the decision. That's what helps you to make the decision to say, I'm going to do this, I'm going to do that. Okay, so this is the reason why the pressure of the sell is going and also the pressure of the buy is going. So there's a pressure between both market to keep pushing up or to keep dropping. And that's what you watch out for. Okay, I hope you understand that, because there's a lot to learn beyond strategy. I know a lot of you like strategy. Hey, strategy, everybody want to watch. The most trending videos on YouTube are strategy videos. But it's stupid because there are millions of strategy in the market, and yet we still have few people really making money. So what's the problem? The problem is not strategy there is. The problem is detail. Many traders lack details. They don't want to spend time on the chart to understand what is going on in the market. So they lack detail. So when you're not detailed enough, yes, that's what the problem is. So we just rush with analysis of strategy. We forget sentimental analysis. We forget fundamental analysis. We just want to trade, and that is risky. That is what is risky. See, you're trading the market without you are not well informed. You don't have specific information to guide you through. So let's go back to the chart so that we will not miss what we're doing here. Okay, now this is where I was saying. Now, if this candle closed bearish, two things happen. We have 5 minutes more. If it closed bearish below this line that is going out, then we'll close out our trade. That would be a bearish direction to the downside. But if it doesn't and it rejects, we still have 5 minutes. So the candle must close. That's why you have stop loss for drawdown. So the candle must close. We have this massive weak direction here. So we still expect, this is just like hunting early, those people who like to break even early and all of that. So let's see what they do with this candle. Remember, the line is this green line. If price closes below this green line and is bearish, strongly bearish, then we should anticipate that they want to go down more. But if this candle close, again, reject and close above it, then there's hope that it's going to go up. So let's watch that in four minutes. And then you just pay attention, because this is how I close my trade. If I know that trade is going against me, remember, no strategy is 100% accurate. And again, I already told you that the sellers are predominant in the market. So you should expect things like this. Whenever the trend is predominant, you should expect things like this. It happens. They will still go in that direction. They will still take out that liquidity, but they will shake people off. People with weak psychology, people that have weak psychology in the markets, they'll shake them off. You understand? So you don't want to be among those who have weak psychology. I mean, you are not solid in your psychology. You are not solid in your price action. So if you are not solid with that, they will just be pushing you out here and there. So that's one of the reasons you need to be very well informed with this. So let's see what happens. Any question, any comments? Let me see.
Hello.
Yes.
I didn't see. Did you drop any link where we should post the assignment?
Yeah, I say in the group. Today's CPI. Someone said today's CPI. Can you imagine? I didn't even check. Yeah, I said in the group, in the Telegram group though.
I was looking for a place to drop this at.
Is it?
Yeah, I was unable to send my own stuff to you that I did today on Telegram because you don't have my number.
Okay, send it to the Telegram group where we are now.
Only you can send message to that Telegram group.
Is it?
That's it.
Yes.
Ah, okay. All right, send it to my Telegram group, my Telegram ID.
So I tried to send
I will send the link. I will send my ID to you guys to send it to me.
This is exactly what I was saying yesterday.
Okay. I got you now. Oh, yes. There's several news coming up today. Okay, that's why. Okay, we need to get out of the market. Me, I didn't even check this one today. Can you imagine? 1:30. So that's when the market is going to smash. So if we don't get any trade this London section, which is already past key zone, then we don't need to trade anymore. So the rest of the day, if tomorrow as well, is going to be busy. So we don't want to test this market. I see. Okay, let's wait for this candle to close in 1 minute. Let's see what happens. What happens to this? Let's wait for it to close in 1 minute. Now, when you trade this system, you can only focus on one pair at a time. That's the problem. You can't trade multiple pairs with this. You have to focus on one pair at a time. And how you do it is to understand the momentum of the market. Follow the momentum. Understand the direction. You can look at any pair. I'm not saying that you have to focus on one pair for the rest of your trading life. No, I'm saying you can by the trade. You want to take a trade, you focus on a pair. Don't take multiple pair. You can, if this one is consolidating, you can move to another pair and see and look at the analysis and see if it is good in the direction. For instance, you want to trade SP500. You want to look at the directional bias. Is it bearish or bullish? Then you'll be able to look at the possible opportunity to trade it. You want to be able to see that. For instance, if I go to this place and show you top setup for a possible analysis for me, this is what I will use it to analyze the market. So we have AU JPY. So AUD JPY, you have Euro JPY. These are all bullish calls. You see 777. So this one is not a lot. So I would rather focus on this first four of the pair. So I would take either AUD card, AUD JPY. I don't like trading JPY pairs really. So I would prefer trading anything above 6. 5 is good. That's why it came up. But I'll trade anything above 6 scores based on the summary of the sentimental fundamental analysis. So let's say I take Euro card, for instance, and I open it. I want to see why they are telling me that it could be going up. It didn't say you should just go and buy it. It's telling you that it could be going up. So it could be going up means that it gives me room for me to analyze the market. That's what it's telling me. So I will not look at why it's telling me that it could be going up. Just the rest of them are saying it could be going up. Doesn't mean that they will go up at that same time. But it could be. So what you need to do now is to do your analysis that suits and match this. Good. So first of all, let's look at the COT information. The COT information says that the euro is stronger than the card. That's very clear. And also based on buy, that means the buyers are more. But if you check the sellers, the card is dropping. And you can see that the euro is stronger in a way that is 3% plus weekly change. So let's see something. We have the retail. The retail position is obvious that the market is selling, but yet the market is pushing up. So why would the retail sentiment be different? Because the market is shifting. This week, the market have shifted by being 3% up. So let's find out. That's what pays out. Euro card. So let's look at Euro card, for instance, just to give you an idea. Euro card. This is Euro card. You see now? So let's look at this week. The weekly candle. All right. The weekly candle is bearish as far as I'm concerned, but the overall market is bullish. So what is the concern with this change? It means that the market opened up, closed this week, opened up, came all the way down. So the interpretation obviously is showing that it could be so. That means the market could push up. So this is like weekly change. Normally every Tuesday, this impact is made. Today's Wednesday. So let's assume that the news today, okay, the news today is going to make a difference. So we're looking at that. The news is going to make a difference on all of this speculation. So that means there's possibility that the market could rally, because overall, if you check this trend, this pair, you see, this is a bullish ride. So this is just retracement. So it can continue to the upside if you want. It can continue to the upside if you want. And that's again another beautiful thing you want to look at. So that's why they say it's bullish. But let's look at the daily and see. So we have, yes.
So excuse me, like in this weekly time frame of Euro card, the weekly time frame, could you say that the liquidity has been taken?
Exactly. That's liquidity grab.
Okay. So it can be able to go up now.
That's exactly what we're anticipating, that price will go up. But this is weekly candle. So remember, it could push up. We don't know what the news outcome will be. But we know that it's already taking out liquidity. That's number one. Number two, we also know that if you mark this high to that high, price just reacted to 61. So we see that price reacted to this level and is bouncing off. So that's retracement complete. The worst case
For the-
scenario is to get to 71.
Okay. For the Fibonacci retracement tool of my own trading view is not really clear. The interface, I have not mastered the interface yet.
Okay, you will learn how to do that. That's fine.
Right,
So,
thank you.
let's check the GU trade we're looking at so that we'll not be a victim of this drop that might happen. I don't want us to be okay, there we go. You see, the market is not ready to go up. So you see this, you see what it's doing now. The market is not ready to go up. It's still struggling. So two things you want to do now. You can close the entry and wait. Just close the entry and wait. Wait for directive, because the news is coming. I wish I knew that it was news coming. I would have told you guys that we should wait before the news. But close it out, leave it. Okay, let the news come and go, because it's going to give us this movement of indecision in the market. So we're going to have this consolidation going on until the news may, at that side, the news want to go. So let's just get out. Okay, get out of the trade, close out. If you're in, close out, take that small loss quickly and get out. It's a small loss, take it and get out. It's not a lot. So that's part of the trade. Just get out. Price may go up again later, but the way it's trading now, I will expect the news is going to cause a lot of challenge for us. I just checked it. It's crazy. Look at today, Wednesday. It's crazy. A lot of things lined up by 1:30. So we have the CPI coming. So we need that to be released. So the market may not settle until the CPI is released. But the system is the same. So I was trying to analyze something just now. You see, every market is still struggling to push, especially those that are affected by USD. They're struggling to push up. Okay, so that's how you do the analysis. Really, that's how you follow them. So just in case you have access to this tool, you don't follow it blindly. A lot of people just come in, those that have this tool, they will just come and say, oh, top setup, and then they'll look at it and say, oh, is it bad, bullish, then we just start buying whatever pair. That's not how it works. It gives you information based on directional bias, and these are weekly changes. Sometimes the changes will not take place, and most of these calculations are done on a higher time frame, from the 4-hour time frame above. So when you try to trade on a smaller time frame, like 5 minutes, 15 minutes, using this kind of, you might be in trouble, because the market might be having a short-term bearish movement, yet the price is saying it's bullish. So you wonder why the price is going down and all of that. But when the price will finally move, that would be when the impact of the higher time frame is gaining ground. So what you do in such a case is to look at the 4-hour time frame of that particular pair. For instance, where's that pair we're looking at just now? We're looking at Euro card. So for instance, you're looking at Euro card, you would like to go to the higher time frame, like 4-hour, to see the behavior. So you can see that on the 4-hour, the market is bearish. So you go to the daily, you can see that on the daily, the market just began to turn bearish. So let me remove that drawing. The market just began to turn bearish on the daily. So for that reason, you have breakout structures to the downside. So this is a pullback on the daily time frame right now. So the market is pulling back, but we're beginning to have the bearish momentum. So what you want to do is to either target both sides, that there will be a retracement, because you already see that happening on the 4-hour. 4-hour is already telling you that there's retracement going on, like that, before the market open. You will see it. So once you see that there's already retracement going on before the market open, then you want to position yourself to target that retracement and work with that retracement, because the 4-hour will always retrace first before it drops. So you have to now measure the retracement. So that will now make you to say, okay, fine, this is what the bullish means. So at this moment, the 4-hour is bullish. I can literally buy a little bit. But overall, the market is bearish on the 4-hour though. But based on retracement, I can now use this system as, okay, fine. I will take advantage of the retracement, knowing that it is still signaling buys. I will be able to look for that opportunity. But you know that structure-wise, that the 4-hour is bearish. There's no way you can deny that. So that's how you go about it. You want to be smart, because it's all about playing with the smart guys. The smart guys are in the market big time. So if you are not smart with them, they will eat your money. That's what they do. And of course, they always eat our money, and we also try and eat as much as we can. But they are smarter. That's why we call them smart money concept. The money makers. Okay, so that's what it is. And let's wait for the news to be released, and after that, we might try to see if we have opportunity. Those of you in the Telegram, if you haven't joined my Telegram group, go join them and ensure you participate. I posted a swing trade opportunity on, what pair was that? GDP JPY earlier on. So let's look at that, why it was a swing trade. Well, overall on the daily we're bullish, so that's fine. And then on the 4-hour we're bullish as well. That's fine, because this is one movement. Let me remove the section so you can see it. This is one movement, right? Up this price. So you need to understand price action and structure. So we can anticipate that from here, if we start marking from here, price pushed up, okay, and broke this structure here. And then we have this push up again that broke that high. And then price eventually broke this high here. So we have this push up that broke that high a little bit. And this high was marked out. And then we have this structure that broke that high too. And the next high was marked out. We have this structure that broke that high. Go and watch my market structure video. You understand it. And then that high was broken. And then we have that structure that broke that high. And this high was broken. And we have, so we can see literally we're bullish over here until this place. So then price broke that high again, giving us a minor structure here, over here. High that was broken. And then if we stretch that out, we have a break to the downside. So we have a small bearish momentum, which was obviously extended. And then what happened again? We noticed that price broke that high. Okay, so it was just an extensive retracement to grab liquidity. And if you put it like this, we are bullish. Back on, resuming bullish until either this high or this low is taken out. We are not bearish. We're bullish. So for that, the swing trade opportunity activated at these lows. Okay, at these lows. So I sent you to yes.
So you say that either what is broken before you know that is bearish.
Either what? Either this high.
You say that.
Did you notice this high? This high here, or this low? This low had to be broken. This one. This is the range. This low had to be broken before we're looking for bearish market. So overall, we're buying. So when I send you a swing trade that we're buying the market on GDP JPY, take it seriously. It's gonna go up. It might take a few days, but it's gonna go up. So that's why I send it to the group on swing trade. Somebody says I should check gold. I've already talked about gold earlier. Let's see. I've already talked about gold earlier. Just a minute. Okay, now on the 4 hour on this, let me show you what I saw. Let me remove that. There's a pattern called the triangle. All right, the triangle pattern. Let me draw it for you. Triangle pattern. Look at this push. You see this push up? Okay, that is the first push up. That's the first leg. So if I mark this push up, that's A to, that's the first push up right there. But that's not what I'm going to do, because the triangle will be from here to here. So let me just stop that. Let me show you what I mean. So from here to here, after this push up, we have a retracement. So this retracement here is my first point to point B, and it stopped based on this impulsive move. Okay, and then price went up here. You see, it came up here and it stopped. It did not come up to break this high, so that gives us a shape. Now when I drag this to the end of the retracement of this from here to here, where did it stop? You see, that's it. You see the trend line from that place to that place. That's a trend line to the bottom. So line up like this. So this is a pattern. So because this is the pattern, the break above gives us our entry. So this is where we're looking at to long. That's where the thing is. So if you check now, price is at that point of entry, and our stop loss is just a little bit lower than this low. So that's this low here. That's where our stop loss is. And our TP is way higher, the previous high. But you could go higher, but you can target this high. You could go higher as well, which is this trade is about 1 to 3 risk to reward. So you can target this high, 1 to 3, because we are bullish overall. So this might take 1 to 3 to 4 days, depending on the market. Who knows? With the news today, who knows that if this will go up, whatever it is. But this is the trade setup for that. And because we're bullish all the way in all the time frame, we're bullish. So you gotta be waiting for that. We're bullish. So even though I changed the moving average to 50 for a retail trader, we're still bullish. The market is bullish. We're bullish still. 4 hour. Yeah, the 4 hour is consolidating. So there's a consolidation here. Price obviously trading between. So that's why we're trying to set that. I mean, we're trying to buy on that pair. So that's one of the system of swing trade. I just wanted to show you patterns on swing trade. So like I said, GU close out on it. I hope you guys have closed out. It's not ready. It's not ready. It's not ready. It's still playing around. So I know the news is going to affect it. So this is the liquidity level we're trying to target on the retracement. That's why we're trading it. We'll try to target that liquidity level so that if we push up a little bit, we'll cash that buy. But because of the news, we might not be able to do that today. So let's wait for the news to be released. And before we do it, I think that's all going to be for today, guys. I've done my analysis. Gold, I've already talked about gold, so I'm not going to spend more time on that. Gold is a buy already. I already mentioned that. If you check the daily previous day, you see that price. I think I marked this area. So now we're having retracement. This is now 8. Price is bouncing off bouncing off that trend line, which I already marked. We have this, and I told you guys on the analysis that I did that we should be expecting price to react at this trend line, second trend line bounce off. So as you can see, price is reacting to it. So there's going to be a retracement to the upside on gold. So gold would like to push up now. It's ready to push up. It's been dropping for a while, so it's ready to push up. Weekly time frame is bullish. Don't date. All of this is just a retracement of this impulsive move to the upside. So I think it's about to push up a bit for the week. Okay, that's it. Let me go take some rest while we wait for opportunities in New York section after the news. After the news. Yeah, you see that? That's why I said get out. You see what it did? Still pushing down. Question is why? I don't know. So the market is obviously predominantly a sell market, but you have to wait for that news to be released. I think the news will push it up. I'm expecting the news to push price up. I'm expecting that. I'm expecting the news to push price up. But if it doesn't, it's okay. If it doesn't, it's okay. All right. So for those of you online, I'm going to let you go now. And I hope you learned something today. Let's keep grinding. Let's keep learning. That's the way we do it. You just keep learning. So I'll see you again in another live stream. What do you mean by sentimental analysis? Just Google it, bro. Google it. Google it. You get the meaning. Google is your friend these days. All right, guys. Thank you so much. And I will see you in the next live stream. For those of you online, I'm going to end the stream now.